All right, what's happened, fellow speculators? Welcome to what we're watching for the week starting Sunday, November 15th, 2020. I just want to remind everybody that, whoops, that's not going to work. That's not what I want to remind everybody of. I have to come over here and go here. There we go. Just that this video is for educational purposes. Nothing's meant to solicitation to buy or sell any security. Make sure you can pause the video right there and read about our risk disclosures and disclaimers. All right, awesome. So it's, again, what we're watching for the week starting Sunday, November 15th, 2020. Well, gang, what a week last week, okay? So the week following the election week, which had a lot of volatility and most everything up to the upside. Russell really breaking out, up 6% just last week. Dow Jones up about 4%. NASDAQ was a laggard, and the S&P was up 2%. Okay, that's all in the past. What do we have going on for this week? We have a lot of Fed speak. Okay, so we do have a lot of Fed speak. We have Moderna that's going to be coming out with their vaccine results, I think, this week. Remember what Pfizer's results did for us last week. And we're going to have overall just a lot of COVID watch, okay, as deaths, hospitalizations, all the numbers are still kind of going in the wrong direction, but market doesn't seem too worried about it. On the earnings front, there is some notable earnings almost every day. JD Baidu on Monday. You got Walmart and Home Depot on Tuesday. You got Target, Lowe's, Nvidia on Thursday. And then you kind of end the week with a whimper. But earnings season is still going on. Now, let's go to the charts real quick. I'm going to come up to the S&P on a weekly on a continuous contract. Remember, we had this spike high from Pfizer last week around 36.65. Markets are up about 1% across the board as I'm making this video here at close to midnight Eastern on Sunday evening. These are pretty bullish-looking charts right here on the weekly and the daily, folks. So while I think the risk-reward overall does not set up too well for getting all bulled up looking for a big breakout here, top of the channel would be around 3,700, a little bit above it. You could place some fibs if you want to look at the 168. I'm sure that's even higher. But I'm actually going to target last week's open, or last week's low, essentially, which was the open about 35.22, 35.15 to 35.22 as an interesting level to sort of watch. A daily close below that, or even maybe a 4-hour dip below it, would be interesting to me to then potentially look to get back into this channel and play two-way direction from the short side. Other than that, I think we're just going to tactically trade pretty small size, probably micros for the whole week, given the fact that, again, this sucker looks pretty bullish and is acting pretty bullish at this point. It's not a market that you want to look to aggressively fade or be shorting. NASDAQ looks a little different here on the continuous contract. Remember, our highs were not quite met on that Monday pop, 12,449, 450 in there. We got just shy of it by about 50 or 100 points, I think, and then reversed off of that. This is more of a pretty big consolidation of about 1,000 points here that the market is trading in. We are on the upper end of it, and until proven otherwise, this would probably be the market that I want to pick on a little bit from the short side, targeting the same thing, basically. Not the open of that candle, but prior week's low, which was around 11,005 for some areas for longs. If we lose 11,005, straight back down to 11,000, this market is technically behaving pretty well, and also gives us opportunities for, again, selling puts or selling calls in this channel. Right now, unfortunately, volatility has really come in pretty dramatically. It's hovering around 23, so you're not quite getting paid as much, but it's also finally a time in which selling upside calls in something like the NASDAQ, which has been ripping off a lot of heads this entire year, finally looks to have some nice risk reward on that. Selling calls in the NASDAQ, which would be a bearish position. Those are bear call spreads. You could sell straddles as well. Russell actually broke out pretty significantly, put in this crazy print up there at 1815. We talked about it in the trade room all week. So someone got fried and suckered in there, but it's a real print. And that print up there is real. There's a huge gap of no volatility, of no trading at all for about 60 points. It's pretty wacky, but it's 2020, so we see wacky things. Here, same thing. I think I'm targeting the open at 1652 is just too deep of a pullback to look to start to get short there. I think we just want to see at these previous February highs around 1680s to 1700s how the market acts. That would be about a 120% ATR pullback to get back down to that level. And I would probably look again to be using that as an area to watch very carefully this week, see how the market wants to react around it, and we can play it accordingly. I probably would still want to continue to favor longs unless there was some kind of look that broke us significantly below that and we got a 4-hour daily close below 1688. Okay, Dow to the Jones. Remember the level up there is 30,000. Pretty easy to know it's 30,000. Again, we're up about almost 1% here on the Dow as well, about 78 bips. Russell's our leader here this evening. So the Dow level is 30,000, keeping it pretty simple. And again, I will be watching and targeting the Pfizer lows there around 28,377 to kind of watch what the market wants to do around that level, basically where we opened up 1 week ago. So keep in mind, 4% week to the upside last week and a 6% upside week for the Russell. All right, one last thing to look at is just gold. Let me come in here and just get rid of these right here. I'm constructive on gold, and 1850 is your level. Okay, break below 1850, it gets pretty ugly. You could see a 150 point drop from there. But just as we're dealing with this range that was established to the upside in the stock indices, we have now a 100-point move that happened in the gold market, and it's giving us this nice range to work off of. Gold fought its way all the way back up to about 1900. Where is it trading right now? Just shy of 1900, 1893. Or I could look right. I could look right here. I don't have to look over there. 1894. I'm constructive on gold as I am on Bitcoin. So around 1850s, I'll look to reload up on MGC and also probably be adding to the December call positions that we have. If you check the Discord channel, by the way, if you are a TDG Total Access member and you're not yet part of Discord, make sure that you let me know, info@tradersdevgroup.com. You need to be a TDG Total Access member and not on trial, and you should get access to our Discord channel. And in the options area, we're talking about spreading out this gold trade 175, 180 as a diagonal ratio vertical spread. Okay, so, well, it's not a vert, it's ratio diagonal. Okay, so that's basically we are long the 170, not basically, we are long the 175 December calls, and we are short the 180 November this week, expiring 180 calls on a ratio of 5-2. All right, so that's still looking for gold to hold up, but we just want to finance that trade over time, giving us some opportunity to see if the bulls can get us back above 185 on the GLD, back above 1950 on the way to 2000 on gold. But so far, obviously, gold has not reacted very well to whatever you want to call new market highs or some certainty. Lower volatility in the market right now has not looked good for gold, at least in dollar terms. All right, that will be it for tonight. If for some reason you're watching this video on YouTube or you found it somewhere else and you're not yet a TDG Total Access member, look for the description below, and I'll put a link to this special that we're going to just run for quite a while here. Spots are filling up, but basically $49 for your first month. It renews at $99. There's a guarantee on this $49. If you apply yourself and you don't 10x your investment in this $49 for everything it involves, it's not only the trade room, which is Monday through Friday from 6 a.m. to 8:30 Pacific Standard Time, but it also involves all of our courses, all of our templates and strategies, weekly technical analysis, TDView in actions, ideas in action. You can read about everything that's going on, including this newsletter here, What We're Watching video newsletter, that I'm going to publish on YouTube for this issue of it. So you can, again, check the description below if you're not currently a TDG Total Access member, and you can sign up for a very attractive $49. Real quick, this is what the results of micros as well as some full gold contracts. Why was it not coming up here? Okay, so November's been looking great. What I do in my own trading accounts is pretty much meaningless. It's not about that. As I often say, it's just potentially seeing if the person that you're watching a little bit can at least swing a golf club. I can swing a golf club, but no guarantees that that you could do that. Did you guys see Tiger put up a 10 on a par 3? Said he'd never done that before in tournament play, so he put up a 10. Congratulations to Dustin Johnson. Anyway, yeah, what a weird year. Threw up a 10, and I think then he birdied out the rest of it. Anyway, the Masters in November, it's all over. And the Raiders stomped down on the Broncos. The Broncos are pretty crappy this year, but basically the Raiders have gotten their butts kicked by the Broncos for decades now, it seems. So anyway, AFC looking a little different finally. All right, we'll leave it there for now. That's what you're watching for the evening Sunday, November 15th. Stay green, trade like you mean it. We'll see you in the trade room. Thanks.